The asset management sector in the Middle East and North Africa region, although relatively unexplored, is growing from strength to strength with a wealth of investment opportunities. With me now to speak about the potential in the region and beyond is Faisal Sarku from Kuwait-based Kamco. Well, Faisal, potential growth in the MENA investment banking industry is seen to be promising, with deal activities gaining momentum. So where would you say are the investment opportunities and what's the size of the market?
Last year was truly a good year. The financial crisis had hit a lot of companies in the region. A lot of business activity slowed down in the investment banking side. And we saw a turnaround that resulted in 2013 being the largest in terms of deal value in the past 5 years at around $73 billion. This year started well, the first quarter, but slowed down again in the second quarter. We're expecting the second half of the year to be strong as well. 2013, we saw some of the highest performing markets in the world, in the region, in particular in the Gulf, in the GCC state countries. That has resulted in an increased flow of foreign direct investment from over the world, which has made it more attractive as well for local investors regaining their confidence back into the markets. So opportunities are increasing. The investment banking side, we haven't seen too many IPOs in the past period. There's a lot of talk of new IPOs in the UAE, Saudi Arabia, some talk in Kuwait, but we expect that once that starts to flow, sentiment will also gather momentum.
Well, the MENA region has seen its fair share of turbulence, so how safe of a place would you say it is to invest?
The region has had its turbulence for many years, so we're pretty used to having some kind of turbulence in different pockets in the region. However, GCC in particular has been very stable politically, despite any issues that happen. The stability factor has been important there. What's more important is the stability in the policies of governments as they evolve and develop the markets, introducing new regulations, pushing markets to move from frontier to emerging status. Currency, again, stability is very strong. GCC in particular, again, in the MENA region, being closely pegged to the US dollar, that has helped have stability in the markets during turbulent times. We're optimistic that political turbulence will result in better efficient government as governments aim to or strive to develop the infrastructure, the human capital, and that instability we believe will result in better operating environment.
And how do you manage risk?
We at Kamco have sophisticated and well-developed risk framework that was built over the years, even before additional regulatory reform and policy that has come in the past 4 years. This has allowed us to remain operationally profitable during the entire financial crisis.
Well, what do you see as the major investment trends for 2014, and what do you foresee as being the major events that will affect the market?
Always remember the context. Young populations, diversification journeys. The GCC, for example, focused on the energy sector, aiming to diversify economies and generate more jobs for the populations that are coming into the workplace. That, alongside significant infrastructure spending. The planned infrastructure spending in the GCC is at around $2.5 trillion. That is led by Saudi and UAE markets, with all other GCC countries putting in significant amounts to develop infrastructure. So that infrastructure development will help mostly on the defensive sectors of the markets. You will have an impact on the healthcare sector, the education sector, the housing sector, and all of this will result in more jobs, more activity, and better capital market movement in the future.
Looking at your Kamco research now, and emerging markets have had a difficult year. Why do you think this is, and do you see them picking up?
The start of this year, they've had a bit of a better pickup as currency issues are being resolved, debt issues are being resolved. However, the MENA region, and in particular the GCC, have had one of their best years in 2013, with some of the markets performing at the top tier. All the markets, 90% of them giving double-digit returns in growth and investor return. One of the key reasons there is the stability of the exchange, the GDP growth that has happened, the stability of the oil prices. So our region, or the MENA region in general, have gone through a good year in 2013, and we expect it to continue this year, despite the political turbulence that is there.
Looking to the future now, and what markets will you target for growth and investments?
The strategy is focused on growing our activities in the MENA region at this stage. We believe the prospects are positive and will remain positive. If you look at all economic indicators, you've got strong GDP expectations. The MENA bloc is expected to be in the top 3 in the world in terms of GDP growth. The impact of surpluses will be there. Extensive government spending on infrastructure and human capital will also will fuel this positive expectation. More political stability will even add to this. We at Qamco have established and are establishing a number of products that are spanning the MENA region from our base in Kuwait, and we hope to grow those products as we truly believe that this region is there to grow and in a faster manner in the future.
Faisal, thank you.
Thank you, Jenny.
Faisal Sarko, CEO of Qamco, many congratulations winning the World Finance Award for Best Asset Management Company 2014.
Thank you, Jenny. Want to take this opportunity to thank you and the World Finance team for their belief in the market, the GCC market, and their efforts into awarding good performing companies like us. So thank you for that. And I would like to also take this opportunity to thank our shareholders and board of directors for the trust they have bestowed us with, and of course to thank our clients for their support and ongoing business and growing activity with us.